Hey guys, John with TRD Trader here, coming back at you with another Set It and Forget It Sunday, or if you're watching this, Set It and Forget It Monday. Real quick, I had surgery on Thursday, so that's why you see this wrap on my head. That's helping to keep the incision, I guess compact and helping the healing process. So feel free to completely ignore what's on my head, even though I kind of look like a cone head. But anyways, let's go ahead and look at the calls I made last week. Excuse me. Let's go ahead and look at the calls I made last week, and then I'll roll right into the calls I made this week. As you can see, I was talking last week about how the week before, so 2 weeks ago, there were COVID pressures, COVID fears weighing down on the market. And then last week you saw that I opened up my my premiums. I opened up my targets so that I was getting lower rates of return. And that was, with the expectation that with a knife that's falling, you want to open it up so that you don't get stuck underwater in stock. And you can see here by the fact that all of my calls expired out of the money except for one that that was a good call, which is what you want to do in a falling market. You want to be able to keep your cash liquid if possible and not have to get stuck in stock. So let's look at the one item that got exercised, which is Tupperware. Tupperware has been having, somewhat of a difficult time going up and down. You can see, if we look at Tupperware real quick, TUP, go to the charts, you can see in the last year it's been like up and down, up and down. So Tupperware has been having, some, wavering interest and wavering support. So, of course, Tupperware was the one that got exercised. But anyways, I had called strike price at 22, and the selling price that it ended on was 21.77. So I was only 23 cents off of calling an accurate floor. And let's go back. So the reason I called 22 was because if you look at this chart, there's generally a good floor of support at around between 21. You can see this 20.75 and about 22, which is right here. So you see that almost most of the time it never goes below 22. And so that's why I call 22. And I imagine that what's probably is going to happen is that this is going to I forget what it's called. It's going to open up really high in the markets. It's going to gap up in the morning this upcoming Monday. So even though it ended at 21.77, you see that you see this green here, that's a little bit of buying pressure near the end of the day, near the market close. That kind of brought it up a little bit. I imagine that this is probably going to gap up above 22 in the morning. Either it's going to gap up or it's going to fall really far. But if it does fall, it's not going to stay there long. If we go back to this, this 1 year chart, you can see that here's the 22 level price support. It's almost never below 22. When it is, here's below 22 from 9.29 to 10. So it was under 22 for about a month here. It was under 22 for about a week here. It was under 22 for about 3 weeks here. So when it is below 22, it's not below 22 for very long. So that's kind of why I picked a 22 price support level. So that's the only one that got exercised. Your basis, if you had gone along with my call, strike price at 22 minus your 20 cents, your basis is 21.80. You're at a loss of 3 cents if you sell now, but like I said, I think the market's probably going to gap up a little bit. So you could do one of two things. You can either in your brokerage account, whatever it is you use, if it's Fidelity, if it's TD Ameritrade, if it's Webull like I do, you can put in a limit loss order. So you just put this to sell at 21.80 or 21.81, and if you put in a limit order on it, it won't sell below 21.80. So maybe for the next day or two, you can try to see put in a limit order to sell it for no less than $21.81 to get 1 cent profit, and then see if in the next 2 days it gets sold. If it doesn't get sold, then what I would do is I would turn around and sell calls. You can turn around and sell $22 calls for $122, and that's a 5% premium. That's a 5% return on your money. So this $122 divided by the original investment of $22, of $22 is a 5.5% return on your money. So, even though we got exercised, you can still turn around and you're making 5% on your money if you don't want to exit the position immediately. So, even though this got exercised, this still turned out pretty good. Let's go ahead and look at all the ones that did not get exercised. All of these expired out of the money. So we had Smith & Wesson, Blink, Fubo, Halliburton, Marathon, MVIS, Riot, Shift, Six, Viacom, Hood. You had various rates of return from, 0.5% here all the way up to just over 2%. Remember, like I said, I was going for lower rates of return last week because the market was a dropping knife. We don't want to try to catch that knife. We want to try to let the knife fall. And, when the knife falls and the stocks are near their floors or near their inter-period floors, then we can start selling puts for higher premiums. And so this week turned out pretty good in that respect. Only one stock got exercised. All the other options, they expired out of the money. If you got in on these, you got some pretty good returns. 2% in a week. You're lucky to get, guys, like I keep saying, you're lucky to get 8 to 12% a year in just an S&P 500 index. And here I'm getting, 2% a week. So that's pretty good. So this was the week of 9/13 and 9/17. Let's look at the options for the upcoming week, which is, let me go ahead and add a filter. Alright, so there we go. We got a filter. So for the week of 9/20 to 9/24, these are the options I'm looking at. You'll see that the chance of profitability calc is lower. That's because I believe that we're closer to some of our inter-period floors on some of these stocks. So because we're closer to inter-period floors, I'm more comfortable picking a price point, a strike point that's close to that floor, so that this chance of profitability calc is going to give you a lower chance of profitability because there's less room between the market price and the strike price. But like, as I'm saying, because I believe we're closer to floors, I believe that there's more support that's going to be propping up the stock. So I'm more comfortable with a lower chance of profitability because I know that the chance of profitability calc does not include whether or not you're close to a floor. It just factors in, volatility, the beta index, and how far close you are from the strike price to the market price. It doesn't include floors or ceilings, and so that's kind of something, when you're close to a floor, that's a judgmental call that I'm making. And so my judgment is that for a lot of these stocks, we're closer to our floors because, or at least we're closer to inter-period floors. Because the market, it corrected a little bit. So now, because it's lower, we can take advantage of that market support pushing the price up and be able to sell for higher premiums. Guys, if I'm like stuttering a little bit, I'm on some drugs, so please bear with me. A number of drugs, gabapentin, oxycodone, some other stuff. Prescribed, of course, but my brain's just a little bit cloudy. But anyways, so yeah, chance of profitability calcs we have from 73% to 82%, and we have ROIs ranging from 0.5%, or not half, well, like 0.7% all the way up to 2.5%. The 2.5% is going to be Blink. Some other ones I like are Viacom and Workhorse at 2%, and Six Flags at 2.75%. These are some of the ones I like, and especially MVIS at 3%. MVIS, we're pretty close to a historic floor, and so because we're close to a historic floor, I'm willing to sell puts closer to the market price, which will get us better yields. So just to show you what I'm talking about with MVIS being close to a historic floor, if we look at MVIS, we'll see, there's a number of ways to judge a floor. So you can go to the lifetime of the stock. Let's go to max. Where is this stuff from? Okay. I did not realize that was once. Oh, that's in the 1990s. Okay. So yeah, this doesn't help us because this is from 2 or 3 decades ago. So let's ignore this part. Let's go to 5 years. 5 years, you'll see that MVIS has basically been, at about $1, and then in the past couple of years it had a run up, so this doesn't really help us at all. So you kind of have to have, you have to just make judgments when you're looking at floors. Let's go to 6 months. Okay, so 6 months, or let's go to 1 year. 1 year, we're getting a better idea of a floor. So you see, when you want to try to judge a floor, you want to look for touch points. So you see the stock goes up, and then it kind of stops at about 13.27. It went up, stopped at about 12.75. It went up, and so this is kind of this is for the most part a floor at about $13, between $12.50 and $13, and then you'll see that sometimes it does go below the floor, and this is an abnormal event in the first quarter of the year. There was large corrections across the entire market, and so that's probably the explaining factor here as to why it broke below the floor. But for the most part, it doesn't break below the floor. But when it broke below this $12 floor, it was only there for about a week. It was only below the floor for about a week, and then it went back up. And then you can see it kind of it travels in between a channel. It bottoms out at about $12.50 and it tops out at about $20. So this is why, going back to me calling a strike price of, where was it? $12.50. Yeah, we're gonna get great premium at $12.50, right? It's currently $12.83, and the likelihood of it going, just based on a 1-year chart, right? The likelihood of it going below $12.50 and staying there, it could break below $12.50, but the likelihood of it staying there is not that strong. So that's why I like at the moment MVIS, just because we're close to this historic floor that has multiple touch points, and then it goes back up, and we can get great premium here, and the stock is probably just going to bounce back up in a couple of weeks. So that's one way of how I judge a floor. So yeah, guys, these are the options I'm calling for the upcoming week. Just one other thing I want to show you. To keep myself further accountable to you guys, I like to be transparent and share as much information with you as possible. I have created a drive where I share all of the work papers I've made. So if you like this work paper, if you want to tinker around in Excel and try to, learn some of, whether if it's learning about the formulas I use to auto-calculate whether or not something has been exercised or not, or if you just want to, have this spreadsheet available so you know what the tickers are in the various companies I'm looking at, I have created a drive. So if you go to this, it's going to be in the link in the YouTube below, but I have a drive where I have all of these work papers, all of these Excel files. It's going to be in the SitFit's fiscal year 21, and this one is uploaded as well. So guys, I hope you learned something. If you didn't, please let me know if you want something, if you want me to talk about something or comment about something, about my viewer perspective on something. If you want me to look at a particular stock, feel free to let me know. Guys, I hope you enjoyed the video. Please like, subscribe. Have a great day.